Okay, can you guys hear me? Okay, I'm going to do a short lesson right now on to my group on my penny stock seals um, on GLSI, and I want to talk about how stocks like this are not. First of all, they're not as unusual as you think, and they're a lot more dangerous than you think. Now, I see a lot of people on YouTube that are coming out and saying, "Oh, I made money on GLSI," and they're actually proud about it, right? They'll come out and say, "I made money on this stock." And when I see guys do that, and when I see traders that are trading these types of things, even if you're a penny stock trader, absolutely know they're fakes, and I absolutely know that it's just a matter of time before they blow their account. It is just a matter of time before they blow their account. And the reason why is because there's no good way to trade this. There's just no good way to trade it. Even if you get lucky, right? If we look at this stock and I know a lot of people were looking at the backside of this on the second day, but let's say that you got lucky. Now, first of all, I want you to notice the volume in here. It's really gappy, right? And what you're seeing in these gaps are halts, okay? So what you see when the stock opens up here and then freezes right here is a halt. And then the stock drops down, and then you can see it rallies up here. It gets halted again. It goes higher, and then it comes back down. And then finally, you can see this is 11:17, right? Almost 11:24. So you're looking at 2 hours. So in 2 hours, how many 1-minute candles should there be? 2 times 120, right? So there should be 120 1-minute candles in here. And in reality, we have 29 candles. So that means the vast majority of that 2 hours, you were halted. So you're a genius, right? You think, oh my God, I just got the most amazing short at the highs at 24. The stock was $4.80. It's a 300% gapper, 400% gapper. It meets my pattern criteria. I'm an effing genius, right? But meanwhile, the stock opened, halted again. Opened, halted again. You might not have even been able to get out of that short to make any money, because those halts would have stuck you in those trades, and you got to be really, really fast. And of course, you're not going to want to get out of that trade at 24 because you think this thing's going back to 6 because, it's a 400% pattern trade. Dun, 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 dun. Okay, so let's say you're the guy that gets long, right? So it's very difficult for the short to get money up until right now. But what if you're the long? What if you're the guy that got long here and the stock went boom after several halts to 25? Are you going to get out? Answer me honestly. Answer me honestly. Of course you're going to get out. And if you don't get out up here, when it halts again and gaps down, you're going to get out. Let's just be real about this, okay, guys? Let's just talk real life trading. Let's not talk about, these people that are saying I rode this thing to the moon, right? So the only people that would have been able to kind of navigate this situation safely probably would have been out of the trade by that time. So by 11 o'clock, the stock starts trading again. Now, in this context, maybe if you got long from 24 to 30, if you got long anywhere in here between 29 and 23, there's not a lot of longs that are in profit, is there? If we look at this box in here, between the time when the stock starts to get liquid, right? How many longs are actually in profit at that point in time? Well, these guys here, but how many guys actually buy the lows? Because I know that most retail numpties buy breakouts, right? So not a lot of the longs in here are in profits. And certainly if you bought this breakout right there, when you get back up to this level, you're taking profit. If you bought this breakout right here, when you get back out to this level, you're getting out break even because you just went through a wild swing, right? Now imagine that you bought this breakout here with 100 shares. Let's say you're a small account trader. You were down $300 even on 100 shares. And let's say you bought this breakout here. You were down $350 on 100 shares. Right? So if you're trading 100 shares and you're down that money for that length of time, when you get back in or to break even, you're going to get out of that trade. Most people, right? It takes a really specific fortitude to sit through almost an hour and a half of losing 300 with the possibility of it dropping back down to 5, right? Would you guys agree with me? Am I making this shit up, or do you guys am I getting the retail mentality right? So the only guys that are really going to sit through anything are the guys that bought at this level and bought at this level because they're the ones that are not in any pain. Does that make sense? So we've established that most of the longs here are out. Any new longs here mostly are in pain, except for these lower guys. Okay? Now, what about the people who are flat, right? What about the shorts? Okay, so when this breaks out here, all these shorts that didn't take profit, they're going to cover at their full loss. So again, now we have 2 periods where normal retail thinking and normal retail attitudes never made any money or made a very limited amount of money. Does that make sense? Now we get into an interesting situation. We get another breakout. So anybody that was flat and watching this, and it is a breakout buyer, they may have bought 30. So here's a situation where some longs are going to get rewarded. But watch what happens. Within 1, 2, 3, 4 candles, it halts again. Now again, if you were long at 30 and this thing's up at 40, are you going to take profits, yes or no? Come on, be honest with me. Be honest with me. Damn right you are, because if you had 100 shares, you just made $1,000. Right? That's a big win. So anybody that bought this breakout, most likely when it halts up here, is going to get out of that trade. Okay. Now it opens up and it gets a little bit more liquid. And now you might have new buyers coming in, right? Or profit taking. And you're going to have some new shorts in here. Okay. So these shorts that held, they're definitely blown their accounts here. These shorts that held, they've definitely blown their accounts here. Because even if you have 100 shares, imagine if you had 1,000 shares, right? So you can see this market just keeps pressing higher. So maybe some new breakout buyers that bought here, they might be rewarded. Okay. And then it does the same thing. It halts again, in which case, if you were long from here and it's all the way at 60, you are definitely, and it halts, you are definitely going to be scared as shit and you're going to get out of that trade. Like, the only people that would not do that, the only people that would not do that are people that are really effing stupid. Do you guys agree? You'd have to be like, if you had $100 risk and this thing was halting left, right, and center, here, 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 are you going to get out when it reopens after you're sitting there for 15, 20 minutes? Right? Of course you would. Of course you would. I've just seen it too many times, guys. I've been in too many chat rooms. I've worked at too many prop firms. I've seen traders in this situation. Very, 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 very small percentage of traders have the retail fortitude, to ride this to 100. Very, 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 very small. Right? Very small. Now, again, what about all the shorts? Well, there's probably not any new shorts here, and there's probably not any new shorts here because these are 1-minute candles. So there's not even time to get short. Does that make sense? And anybody that didn't cover, or God forbid, added in this level here, or in this level here when they had time to add, well, they just blew their account. Gone. Zapped. Extinguished. Especially when it gaps to there. And especially when it gaps to there. There is no short that could have survived that. Right? If you think that the average retail trader, let's do a little math. The average retail trader that trades penny stocks usually risks what, 5% of their account? I've heard as much as 8 to 10%. That seems to be, I would never teach that. But that seems to be the norm for most of these retail traders, as they'll go between, let's just say 3 and 8%. So let's just give it an average of 5%. So if you had 5% of your account and you were stuck from the 24 level and the stock went up another 400%, your account's gone. Right? And that's exactly what happens in these parabolics that gap up like that. They keep going until every short is extinguished. It's not the buyers that are driving that market. It's the short covering that's driving that market. It's a function of lack of liquidity. And the only one driving that market higher are short stops. Do you guys understand that? And that's what creates that dynamic. It's not buyers that create that dynamic. It's just short stops, trapped short stops that are creating that dynamic. Now, ultimately, really, where do new shorts come back into the market? All the longs are dead, crushed, annihilated, counts are blown. Where do the new shorts come back into the market? Maybe after this candle, but it happened really fast. Again, that's a 1-minute candle. Right? So I doubt there's many new shorts there. Maybe after this candle again, some shorts would have came in. Maybe. Very few though. So if these shorts are in the market gaps and then backs up on them really fast, are they going to cover their shorts? Yes or no? You guys answer me, yes or no? For sure they are, right? Are there new longs here? Maybe. Maybe the guys that think it's going to go to 200. Oh, sorry, it opened down here. Forgive me. That was the next day. So there's no new shorts. Sorry, I got off track here. So there's no new shorts in this market, are there? There was no way any new shorts could get into this market. So shorts could never have made any money in this market on this day. And longs are probably got out of this market because what created that was the short squeeze. Does that make sense? Now, is there one or two guys that got really lucky, happened to be away from their screen, right? Didn't see all of this happening, and very luckily came back at the precise moment the stock hit 150? I highly, 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 highly doubt it. So a stock like this, as you can see, is a lose, lose, lose situation. It's impossible to win in this situation unless you're lucky as feck. And if you did make money, the only guys that really made money were the guys that bought this breakout at 31.26. Or the guys that bought this breakout at 48. But I doubt the guys that bought this breakout at 30 would have held much longer than this. And maybe the new guys that bought at 40 would have held much longer. So I'm not saying that there aren't longs that made money. I'm just saying they got lucky as effing hell. As effing hell. It was pure luck. There was no skill. There was nothing that you could have based upon any reasonable thing except for just pure luck. They saw a breakout, they bought it. They saw a flag, they bought it. Okay? And then they got lucky in that situation. But for every one time this happens, there are 1,000 times or 100 times it doesn't. How do you know IMMP wasn't a flag breakout? Right? And boom, they got their ass handed to them. Right? How do they know that UTSI was not a flag breakout? And boom, they get their ass handed to them. There's no skill involved in GLSI. There's no skill involved in trading that. And if anybody made money on that, it was just pure luck. So if I want to count on luck, should I really be trading penny stocks? Or should I just be avoiding contexts like this? How could you have avoided this context like this? Well, when I saw all these halts, I would have not touched that thing with a 10 effing foot pole. All right? All of those halts would have told me to stay the hell away from that. One halt, okay. But 1, 2, 3, 4, 5, 6, 7, 8, 9 halts, like within the first 2 hours, or however many it was, 4 or 5, I would have just stayed away from that. This is pure gambling and pure luck. Right? So, stay away from these parabolics. Now, can you play them maybe the day after when volume picks up? Well, quite honestly, I was watching it. But guess what the borrow rates were on this stock. 100 shares was $700. $700 to borrow 100 shares. So the following day, maybe at another broker, Cobra or something, you could have got it cheaper, but I doubt it. Look at the movement. It doesn't even really move that much, right? So if I want to short 100 shares at 106, where does it have to go for me to break even? Right? Has to go to like 99 just to break even. Right? So yeah, I could have made a little bit of money, but the borrow rates were way too insane. The only one that were winning on this day was the broker. And notice the tight range on it. Right? Did shorts make any money on that day? Not with those borrows. Hell no. Longs might have made a little bit of money, but not a lot. And you better have balls of steel. This is the one day where I will say longs could have made some good money, right? But not longs that are buying breakouts. Let's look at those guys. The guys that bought these breakout, they didn't make any money. They got break even. What about the guys that bought this breakout right here? They didn't make any money. So longs didn't make any money on this day unless they bought this low. And that's not what retail traders do. They don't buy lows. They don't know how to buy value because they don't know how to assess value. So shorts didn't make any money because the borrows were so high, or maybe they could have later on in the afternoon. And longs didn't make any money on that day. And the same holds true for this day. Shorts could have made some money on this day, but the volume also dried up quite a bit. And I didn't check the borrows on day 3. So the bottom line is, in hindsight, you'll go on YouTube and you'll find 100 guys saying I made money on GLSI. But those guys, don't kid yourself, they just got lucky. Pure luck. Pure luck. The shorts didn't make any money on GLSI, and I explained why. So the moral of the story is, when you see a stock that's halting like this, that has some crazy context, just stay away from it. Especially with such a limited history on this stock. I mean, the stock has only been here since September. There's nothing to base your evaluation on. Okay? Now, maybe if this stock had some history and, it had a history of doing something like this, you could have made money on it. So if you're watching this video and you made money on GLSI, congratulations. You're a lucky son of a bitch, but you're not a skilled trader. You're just a gambler. Okay, guys, stay away from shit like this. That's the lesson for today. And if you want to learn how to really trade good penny stocks, right, head on over to my website, and I do have a penny stock course, and I'll teach you how you can find much, much easier, better, and trades that do not rely on luck so much. Okay, bye for now. Love you all.